Welcome to PhatBear Pod, your Wednesday dose of blockchain banner. I'm your host, PB. Grab your coffee or your whiskey. No judgment here, and let's dive into the chaos. Bitcoin is smashing through 94K like it's auditioning for a Marvel movie. Pow! Take that, bears. Shorts got obliterated. With $601 million in liquidations from degens betting against BTC. The whole crypto market's acting like it just chugged a Red Bull. Total market cap's up 6% to a juicy $2.94 trillion. And the 24-hour trading volume is up 53% to $135.5 billion. Seems like everyone and their grandma's FOMO back in. Bitcoin dominance rises to 63.5%. That's right, the king's taking up more of the pie. The fear and greed index, that mood ring of the market, just pumped to 52. We're in neutral territory again after just one green candle. For alt's performance, the winners are Deepbook, Immutable, Turbo, and LivePeer. The losers are Ergo, Treasure, Pax Gold, and Pump BTC. For our macro news, we got a story from South Africa. South Africa's consumer inflation just hit a 55-month low, clocking in at 2.7% year-on-year in March, down from 3.2% in February. Prices are rising slower than my motivation to check my portfolio after a crash. Stats SA says food and non-alcoholic beverage inflation dropped to 3.6% from 4%, and transport's down to 3.9% from 4.3%. Apparently, South Africans are spending less on groceries and gas. This 2.7% is the lowest since December 2020, back when we were all panic buying toilet paper and dreaming of $100,000 Bitcoin. The South African Reserve Bank's got to be sweating because their 3 to 6% target range is looking lonely at the bottom end. Analysts are whispering about a 25 basis point rate cut tomorrow, but with global trade tensions and a potential VAT hike looming, I wouldn't bet my sats on it. Governor Kinyago's probably pacing, muttering about oil prices and Trump's tariffs like a doomsday prepper. Time for some spicy crypto news that's got the EU throwing a regulatory tantrum. The US is out here waving its dollar peg stablecoin flag, and the EU's having a full-on meltdown. Apparently, America's big crypto endorsement, think Trump's World Liberty Financial and its shiny USD1 stablecoin, is giving the European Commission and the European Central Bank, ECB, a bad case of the vapors. The ECB screaming that U.S. stablecoins could tank EU financial sovereignty, like the dollar's going to sneak in and steal their croissants. Meanwhile, the Commission's like, chill, it's fine under micro rules. Classic EU, bickering while the market moves on. European money allegedly ready to yeet itself to the U.S. for those sweet stablecoin yields. The ECB's waving a report saying these dollar-backed coins are a threat, but the Commission's not budging on rewriting MiCA. Look, I've seen enough regulatory FUD to know this is just bureaucrats flexing while DeFi keeps chugging. The U.S. is pushing stablecoins like Circle's payment network and Fidelity's tokenized dreams, and the EU's stuck arguing over who gets to hold the rulebook. Next story. Cantor Fitzgerald's out here making waves with a $3 billion Bitcoin venture, and they've roped in SoftBank, Tether, and Bitfinex to the party. Brandon Lutnick, yep, son of Trump's Commerce Secretary Howard Lutnick, is spearheading this beast, aiming to channel Strategy's playbook of hoarding Bitcoin like it's digital gold. They're calling it 21 Capital, a new firm under Cantor Equity Partners, which already raised $200 million back in January. Tether's tossing in $1.5 billion in Bitcoin, SoftBank's dropping $900 million, and Bitfinex is chipping in $600 million. That's a lot of cash to buy BTC. The plan? Create a publicly listed Bitcoin stockpile to ride the crypto wave, especially with Trump's crypto president vibes pumping the market. Some calling it a massive move to rival Strategy's 530,000 BTC stash. But here's where I get that old crypto itch. This deal's not locked in, and the numbers could shift. Plus, they're pegging Bitcoin at $85,000 per coin for share conversions, which feels like a bet that could age like milk if the market decides to rug pull. Cantor's no stranger to Tether, managing their $134 billion reserves, and even snagging a 5% stake in the stablecoin giant. Last crypto story. Malaysia is going all in on blockchain, and they've tapped Binance founder CZ to help turn the country into Southeast Asia's crypto prom king. Prime Minister Anwar Ibrahim met with CZ to plot a financial overhaul, talking tokenization, digital assets, and making Malaysia the cool kid in the Web3 cafeteria. People are calling it a bold play to lead digital finance in the region. Anwar is pushing for multi-agency backing, regulatory clarity, and basically wants Malaysia to be the blockchain hub where everyone else wishes they RSVP'd. CZ's role? Strategic advisor, dropping wisdom on how to digitize financial instruments and build a crypto-friendly ecosystem. This comes after Malaysia's already high crypto adoption. Think millions of users and billions in transactions. But here's the kicker. Binance has faced regulatory heat in Malaysia before, even getting blocked on local app stores. Now they're rolling out the red carpet for CZ. Smells like a plot twist. The PM's all about responsible innovation, but I've been in crypto long enough to know responsible often means we'll make it up as we go. Next up, we're waiting in the deep end of the DeFi pool, starting with Zora token launch. Zora's token will be live today, April 23rd. Zora, that NFT marketplace turned on-chain social network, is dropping its native token on Base, with a total supply of 10 billion tokens. The token's billed as a fun meme coin for the Zora community, with no governance rights or equity claims, just pure vibes. But majority of the tokens, 65% of it, goes to the team and insiders. Makes you wonder, why does the team need two-thirds of a meme coin? Binance is listing Zora on its alpha platform at 1 p.m. UTC, alongside KuCoin, Gate, and MEXC, with a pre-market price hovering around 3 cents, pegging the airdrop's value at $30 million and the fully diluted market cap at $300 million. The NFT market's bleeding, down 12.4% in volume last month, with Zora's own user base tanking 80% in a year. So why the hype? Probably because Base's Jesse Pollock pumped Zora's content coins last week, spiking 230,000 new traders, though some smell insider trading. Next story. Galaxy Digital, led by crypto bro-in-chief Mike Novogratz, just pulled a $100 million plot twist, swapping Ethereum for Solana like they're trading Pokemon cards. On-chain data from Look On Chain shows Galaxy moved 65,600 ETH, worth about $105 million, to Binance over 2 weeks, snagging 752,240 SOL, valued at roughly $98.37 million. People calling it a flippening, while others scream dumb money at Sol's all-time high ETH ratio. Why the switch? Ethereum's been taking L, trading below $1,600 with a 20% drop in a month, while Sol's up 8%, riding a wave of meme coin mania and DEX volume topping $500 billion. Solana's got 220 million active addresses, dwarfing Ethereum's 80 million, and Galaxy's betting on Sol's low fees and DeFi buzz, fueled by platforms like Pump.Fun. They even staked $40 million in Sol post-swap, signaling they're not just here for a quick flip. But here's the shade. Galaxy still holds $87.9 million in ETH, so this feels more like a hedge than an all-in YOLO. Last DeFi story. Trump Media and Technology Group, TMTG, has finalized a deal with Crypto.com to launch a batch of exchange-traded funds under their Truth.Fi brand. Announced on April 22nd, this move's got Truth Social's parent company diving headfirst into crypto, promising a Made in America ETF lineup that mixes Bitcoin, Crypto.com's Kronos, and other digital assets with stocks from energy and manufacturing sectors. Crypto.com's Forest Capital is handling the heavy lifting, back-end tech custody, and supply in crypto, while Charles Schwab's custodying $250 million of TMTG's cash and project. The ETFs are set to launch later this year, pending SEC approval. CEO Devin Nunes is hyping it as a way to create inventive funds for investors who hate woke nonsense, whatever that means. Crypto.com's Chris Marsalek is all in, boasting about their 140 million users getting access globally. But here's the problem. Crypto.com's reissuing 70 billion burn Crow tokens to fund this, inflating the supply to 100 billion, and pissing off 80% of wallet voters who got outmuscled by whale governance. The airdrop guide today is Sol Labs' incentivized testnet. Sol Labs is building an omni-chain liquidity layer powered by Layer 0, aiming to stitch together DeFi fragmented lending markets across chains. Think Pendle meets Aave, but with cross-chain swagger. Their testnet's live, and it's your chance to farm seeds, Sol's point system that'll convert to SOL tokens when the testnet wraps. To farm it, head to Sol Labs testnet dApp on their official X account. Once you're in, go to the seed section on the dApp and click My Quests. This is where the grind begins. Quests are simple tasks. Think depositing testnet tokens, borrowing assets, or swapping across chains. Some tasks might involve social stuff, like following their X account or sharing posts. Complete Quest 1 to kick things off, and keep checking the Seeds tab for new tasks. The more quests you crush, the more seeds you stack. That's a wrap for this Wednesday's episode. I'm PB, signing off before I get rugged by another meme launch.